Okay. Good morning and happy Thursday and happy reopening of the government. Before we get into, I would say, market mechanics, I do want to look at some news because one of the big things that I have personally been waiting for with the government, I guess not being open, is all of the economic data we haven't gotten. And we've had over a month of data being delayed, which is a problem in and of itself. But now that the government's open, it's not like all this data is just going to like suddenly come out today, but it is going to be coming out in, I would say, batches pretty soon. And so I've been looking at the news this morning and I found an article from CNBC that's kind of talking about when the different agencies could potentially release their data. And so we're looking at the Department of Labor, the Department of Commerce for things like unemployment data, jobs data, inflation expectations, a lot of those things that we did miss. And so they were estimating that things like payroll, CPI, producer price, um, they could come out potentially like this week or early next week. Um, but some of the ones that haven't come out in the past month, they were saying that they could be delayed by at least a week. So we will see. I don't really care too much about what the number is, but what I do care about is just knowing when those numbers are going to release because I think we're going to have a lot of tape bombs when those come out. And I'm hoping they do give us a little bit of notice before they release the numbers. So we're not just like trading along and then something totally smokes us. So yes, all the feds are going to be back kind of doing their jobs, but I think the interesting part about the data release too is like, is it going to support the thesis that the FOMC put forth on like actually cutting rates yet again, right? Because the FOMC was using a lot of data, I think that was happening prior to the release, and it just feels like a lot has changed, especially while the government was shut down. Especially things like consumer sentiment were probably feeling pretty low around that time as well. So it'll be interesting to see because I think it'll kind of potentially pivot the direction of how the FOMC, reacted to this last meeting. I'll be curious to see what those minutes say, and then how, of course, they want to handle the December rate decision as well. So that's just a little bit of news. But let's go actually get into the markets. So looking at our yellow box yesterday, we actually played pretty well. We had an initial yellow box win to the downside. Excuse me. Um, we had an initial yellow box win to the downside to hit our average range support pretty cleanly, actually. Bounced right back up, saw a little bit of resistance. This was, I think, when the House passed the funding bill. We're able to pop back above yellow box. Actually, in premium last night, we did take a little bit of a long um, down here at 81. We ended up taking a long at 81 and we're able to squeeze about 7 points out of it. Ended up stopping break even. Um, Ended up kind of staying a little bit bullish. Got to this average range area. I was hoping first to get all the way up to 97 yesterday, and then had a potential rejection area, especially before London opened at around like 902 to 907. But we never did actually see that. We're back into being a little bit bearish, being back below yellow box, and so we've actually had a pretty range bound day. Like we didn't really have too much movement. So let's hop into our fractals to see what kind of levels we have. Hopefully we get something today because yesterday we didn't mark anything. I hope everyone had a good trading day yesterday, but we didn't really find any good gray box bounce zones. So we're currently trading at 68.54. Let's go see what fractals look like. Okay, good morning, guys. 68.64. Okay, so here we are. Here's our wave one daily. 6864 is our current vector on the wave one daily, which I believe we're trading at right now. Yep, we're at 6864.50. Sorry, 6854. So we are 10 points below our current vector. Um, we made that H4 yesterday, just barely. We had actually a pretty boring day yesterday. We ranged pretty tightly. Um, Ended up revising back below pivot here for our first L1 to start forming again, especially if we continue to stay bearish. see. 801.98 lines up with our wall and our spice levels. Oh, good. Okay. Wow. So that's actually really far down, Dark Horse. So let's see what we have. Do we have anything down at 801? I guess we have our 50% odds on our wave one daily, and then we have some open states at 79 and 71. That's good to know that our splice levels are down at 801. Man, I wonder if we're going to be able to get ourselves that low today, though. We do have that 50% odds level, but really on the wave one daily, because we just created that L1, I'm, not expecting like any sort of significant reversions on the wave one daily, especially because um, we have quite a bit of room down. And this open state that we're looking at right here is the one that we have been forming today. So I'm not going to be paying attention to that one. So let's go look at the 7 wave 60 and see what we got. Um, Dalton, yeah, we can look at gold after we look at ES real quick too. Dude, I know, Dark Horse, like with how much we have been moving, I probably wouldn't be too surprised to see just a 60-point move to the downside. So we could look at 801 for a potential high probability bounce. Let's see if we have any clarity on these ones as well. So we have on the 7 wave 60 in our bearish wave still, 6872 is that current vector location. Again, we tend to want to ignore these open states that we create on the days that like and the times that we're creating them. We do have a double bottom and an open state at 6843.77 on the 7 wave 60. The one thing I want to say though about that is like 43.77 beyond having that double bottom, we're actually really not that overextended on the 7 wave 60 by coming down to this 43.77 area. So I'm going to keep an eye on it, but and if we have open states like in some of our lower time frames, we can look at it for a potential bounce. But like I kind of prefer waiting for us to get kind of down to those 20% odds more or less. But 43.77 I believe is pretty well in confluence like with the top of our IV walls as well on ES. So we'll see if we have any other confluences at this 43 to 44 area. So on our 20 wave 15, got that open state at 68.53. And then again, we do have another one here at 68.43.36. So same, it's probably the same open state that the 7 wave 60 created back. When was that? It's 11:12. That was yesterday afternoon, yesterday evening. And that is also paired with our 20% odds. So this is an interesting spot to potentially look at for a bounce. The one thing I do like about it too, in a way, is that we have a lot of blank space on the 20 wave 15 below this area. So that means if we do lose this level, it's kind of hard to have FOMO about losing it because obviously we should see a pretty decent amount of drift to the bottom side here. One thing I'm noticing too, Dark Horse, is about that 801 level. Like we don't have an 801 level kind of showing up here. What is this? We have this one little cluster here up at 808, but even on the 7 wave 60, I don't think we saw too many confluences at that 801. Um, but we'll see if any of our lower time frames have it. So far, 843 to 844 is showing some minor potential for an open state bounce. Let's look at the 10 wave. Okay, so we have something at 38 down here, and that's actually also posting as a double bottom. Um, then we have our 20% odds here at 35. Um, one little cluster here at like 42 as well. So far we're looking at like 38 to 43 potentially for an gray box area for a bounce. Being down to the 20% odds does give me um, a little bit of confidence. Oh, Bulu, hey, thank you for translating your YouTube to Discord name. Good morning. Let's go look at 7 wave 5. So far, 38 to 43 is looking all right, guys. Okay. So here's our 7 wave 5. Bearish wave again, which I like seeing, right? We're showing all bearish waves, trading below vector. So we have like nice trend across all of our time frames, which I really do like to see. We do have this open state that we formed, um, let's see, about 50 periods ago, and this is at 44.30. So far we're seeing like basically 38 to 44, which is a pretty big zone. We could kind of ignore that 38. We could potentially look at the 38 as like a last line of defense for invalidation of the zone. But really that like 42 to 44 is probably where we're seeing our biggest density right now. That's at our 5% odds on our 7 wave 5, so that looks good. And again, similar to that 20 wave 15 minute, we have a lot of blank space below this 44. So that does give us like a little bit of decent confidence that if we get below this zone, like whoop, whoop, nope, it's invalid. We can call it a day and not be worried that there's just going to be like tiny resistances kind of dragging it through. So 44 looks good. Let's look at our 50 wave 1 minute. Okay. Showing nothing on our 50 wave 1 minute. We do have an open state down at 68, all the way down at 68.25. We have something up at 68.52, which should have been the open state we just created. But otherwise, we've actually closed most of the open states that have been posted on our bearish waves. Let's just go look at a few more days to see if we have any other opportunity in any of these zones. Nope. So beyond our 5% odds at that 68.40, I do think this 38 to 44 level looks pretty good. So let's go look at our chart and mark that zone in general. The zone's a little bit big, right? But 38, oh look, we're actually getting really close, guys, 38 to 44. Shoot, we better mark this thing. I'm gonna miss it while we're analyzing it. Okay, so I'm gonna mark 44 all the way down to 38. That zone's actually not that big. What is that, 38? It's 6 points, so that's not bad. It's not terribly huge. But the one thing I'll say in looking at this, like to go back to ES, for example, so let's just say we get down to 44, right? And we want to take a bounce. One of the things that I'm going to really be watching is where our vector positioning is. Because, like, for example, our vector, I think, seems to be as low as like 68.59. It might be a little bit lower in some of our others. I think the 7-way 5 minutes going to be our lowest. Yeah, so 68.59 is our lowest right now, which basically means if we do take that bounce at 44, a lot of our like our big trim is going to be at 59, which is a pretty good risk to reward, right? If we take a 6 point zone all the way up from 44 to 59, that does look good. Now, if we get into market open and we want to, and we tend to consolidate and consolidate and consolidate, and eventually do hit that gray box zone, and say our vector is maybe at like 48, but we take an entry at 44, that makes that a lot of a less attractive zone for me. I'm not saying that the zone is any less high probability, but the risk to reward on that becomes so much less, right? So since we're pretty close to that zone already, one of the things I do really want to be looking at is where our vector is going to end up playing. Because right now we can mark it, right, guys? And we know that it changes constantly, but it's right now at basically like, I think it was like 59 to 64 is kind of like where our current vector is playing. If we can keep up in this zone, this gives us really good risk to reward to take our big trim back up towards vector. So that looks really good. Dalton wanted to look at gold real quick, so we will do it. But I am very curious to hear what you guys have to say about gold because I am not a gold expert. So let's go look at our gold chart. See, look, I don't even do anything with it. But looking at a 15-minute chart. Okay, so we've been pretty bullish. Surprise, surprise. What's new? Okay, so we've had a lot of bullish pushing here. Had a high at 42.50, and we're trading currently at 42.32. Let's go look at some gold. So our wave one daily on gold, we have our vector at 42.29, and we've currently made an H2 we're currently making an H2 on our gold. Um, we have a couple of open states that are actually pretty interesting. These are a little bit difficult to see because it maybe looks like did we close this one? It almost looks like we might have closed this one, but we have this one at 42, 90, and 50. And this one at 42.90 was made a couple days ago. So I feel like we should have closed that one. But there's that one that we've currently made at 42.50 from today's candle. And then 42.70 is an open state that we made almost 20 days ago. So this looks really good because it's also at the 20% odds. So we have 42.69.90 is our 20% odds, 42.70 and a quarter. It's an open state. Let's go look at 7-wave. Actually, I do want to look at the 7-wave 60. Let me change this to 60 real quick. There we go. Okay, so we're at 42.37 is the vector. 42.82 is where the 2% odds are posting here. 42.98 is an open state. So we're not really seeing too much confluence with that 42.70 that we saw in the wave one daily. And then of course we ignore this open state because we just made it. But we are overextended even on the 7-wave 60. Look at that. we're like trading technically currently at the 10% odds, but we did get ourselves above the 5% for a moment. So if we could get up to that 2% odds, we would then be seeing 42.82 and a half on that 42.70. That's like a 12-point zone, which is kind of big, but there is a decent amount of resistance between 70 and 82 currently. So now let's go look at, oh, sorry, actually, let's go look at the 20 wave 15. Okay, so the 20 wave is showing a new bearish cycle just formed, and vector and pivot are kind of right on top of each other. 42.37 is that current vector. 42.87 is that open state that was recently created. If we would come back up there, the one thing I would just watch that if these like lower time frames do get back above pivot, to look to see if any of these odds that there's a revision on price changes, and then if these open states, if prices have changed at all. But to the downside, there's some opportunity here at 42.14 and 41.99. Actually, there's a pretty decent look at this, like all the way down here from 41.99 all the way down to 41.87. There is some density here as well. You could technically start at 93. Let's do the 10 wave real quick. Okay, so this one, where the heck are we at on this? Okay, so price is technically below pivot, vectors technically above pivot. But look at this, guys. Again, another pretty decent spot of density between 83 and 94 for a potential bounce. On here, we got the 2%, 5%, and 10% odds lines up with a lot of open states. And those open states are old. Look at that. That one's 447 periods old. That's crazy. 41.83. So maybe down there's a good bounce potential. And then let's look at the 50 wave 1 minute real quick. Okay, so we're super overextended on the 50 wave 1. We're going down just to 41.22. So let's go look at like 4 days real quick. A few more days. Okay, there's an open state way down here, 41.95. But that's a really, really old open state and significantly past the 1% odds. So if you're looking for scalping for a bounce, I wouldn't probably want to go too far past the 1% odds on the 50 wave 1, but there's not other confluences on the other charts. So let's go look at the 7 wave 5 minute real quick. We'll change this one back to the 5 minute aggregation. Okay, so this is also bearish, and we're seeing let's do one more thing here. There we go. So this is our 7 wave 5 minute. Bearish on this. This is interesting. Why is this 7 wave 5 minute so big? We're getting ourselves all the way down to like 41.30. Super interesting. Um, hmm. Well, I think there's a couple bounce zones on the high side and the low side. I think that like 41.80 to 41.90 zone for a bounce looks pretty good. And then if you look at any potential rejections to the upside, that wave one daily at like 42.70 to 42.84 looked pretty good as well. So I don't know, Dalton, if that looks like any good opportunity for you on gold at all. But I do not touch this thing with a 10-foot pole. Um, Dark horse, something we're talking about looking at stops real quick. So, do I normally just put my stops below the rejection zone, or is there a risk uh, in points that you use? I try to look at a risk in dollars. Honestly, I try not to risk more than like $2 on a trade for any sort of like real money accounts. Like this is a trading combine. Like I tend to just play with it a little bit more frivolously for the like practice accounts. But like for this, for example, because it is 6 points, I'll probably have a hard stop at 38. Um, a lot of the times, though, especially when New York session just opens, one of the things I really like to do is like confirm like a 5 minute break below the zone. Um, the other thing I'll say is like there's been a few times definitely recently like we take a trade shortly after New York session opens and I'll be like, "Okay, we should put a limit order at 44." And it sometimes happens where we get this like strong push down and potentially like wick through the zone and then come back into the zone for that kind of accumulation and bounce back up. And so I've been trying to be a little bit more picky with taking market orders, especially when we're so soon into New York session open. But, like, if we're, maybe an hour or 2 hours in, I might just put a limit order in there, but, like, I do try to have a market order so we can get a good informed entry and not just accidentally get worked out. But My stops are usually at the bottom of the zone, or if you guys have the tolerance for it, a 5-minute break and close below the zone, which that does get scary though sometimes, right? Because like if you just shatter through that zone, you could easily, lose 10 points waiting for a 5-minute close below. So there's a little bit of a read to it, but I really try not to risk more than $200 to $250 per because, I kind of like that 3-to-1 risk to reward. So like you could technically have like a 33% win rate and still be green. So I kind of like being like super risk averse with like a 2 or 3-to-1, basically. Yeah. I think the zone looks really good though. We have some pretty good confluences with our ivy walls. Um, we've been ranging pretty well overnight. Like it does look like we've been bearish. We've definitely formed a pretty good bearish trend after this rejection off the top of our average range. But like it's not like we were having like overwhelming downside where we're like anywhere near something we would consider an outlier day. So these confluences with low probability of continuation down, as well as a pretty decent density of open states, gives me some good confidence to definitely attempt to bounce if we get to this area at New York Session Open. And our vector is currently playing pretty well, which is really good to see. So yeah, hopefully we can get that vector continuation down and play ourselves a nice bounce for the day, guys. Well, I'm happy we were able to find a couple zones, which is great on this lovely Thursday morning. But otherwise, guys, I think I'm going to go grab myself some breakfast and get myself prepped for New York session. So, for those of you guys who are in our Ascend Premium, I will be trading in live voice and we'll see if we can get ourselves some good setups. But otherwise, guys, we will chat with you tomorrow. Have a great day. Trade safe, everybody.